Housing market 2021 forecast. Where did the buyers go? We accidentally discovered an amazing trend in the data that shows buyers are disappearing. And we've seen it anecdotally out there as real estate agents. We're seeing fewer offers, which means less competition on listings. But we actually found data that supports it, and we can't wait to show you. Hey there, Christian Walsh, Wire Associates. We're real estate brokers based in Southern California, helping buyers and sellers and tenants and landlords during these crazy days in California and beyond. And we're here with a big update on something we accidentally discovered. We can't wait to show you the numbers on buyers disappearing from the market. Could this lead to the price reductions that a lot of buyers have been waiting for? We will see. And remember, we can't give legal or tax advice, but for the most up-to-date and honest real estate advice, subscribe to this channel. I want to make an important point first before we dive into a reduction in housing market 2021 values. Just because the number of sales drops doesn't mean that we're necessarily seeing a reduction in price. And what do I mean by this? Inventory has been low. So technically, we could see fewer sales because there just aren't as many homes for sale. But if we have the same amount of demand or even more demand fighting over those fewer sales, prices aren't going to go down. So we have to have two things, either one or both, in order to see a price reduction. So in the housing market 2021, in order to reduce prices, we would need to see more inventory. So if we had more inventory come to the market and there's enough homes for everyone to buy, or more than enough homes, that's where we potentially could see values plateau and drop. Now, we don't expect a wave of inventory. We're not expecting a wave of foreclosures, if there is one, until 2022. New homes, builders are building as fast as they can, but there aren't a wave of new homes that are coming. So we don't expect inventory to increase. So number two, the other thing we can look at is demand. So if there's fewer buyers competing over the homes that are out there, whether there's a ton of homes or there's a few homes, if there's fewer buyers, that leads to potential where we could see prices plateau and even drop. And that's what I believe we are right on the cusp of. We are about to see much, much less demand. And I found data, a very leading indicator that actually demonstrates this. And it was an accident. So I know at least some of you are thinking, Christian, you're crazy. I'm hearing all over the news and I'm hearing from a bunch of YouTubers, the market's on fire, values are through the roof. You're absolutely crazy to be saying something like this. This can't be true. Here's the thing we need to explain. Leading indicators versus lagging indicators. And what this means is the things that you'll find on most YouTube channels where they're sitting there and showing you snippets from the news, or you'll read on the news yourself, those are lagging indicators. Those are in the past. So when we're actually examining the number of homes that have closed, that is a lagging indicator. It's way down the road. So a lagging indicator is a piece of data that's already happened, like closed sales. The Case-Shiller Index, which is by far one of the most important and best indices for the housing market, is a lagging indicator and an extremely lagging indicator. Those reports are released with a 2-month lag on the last Tuesday of the month. So in other words, you're getting at least 2-month-old news by the time you're looking at Case-Shiller, and that's if you looked at it on that last Tuesday it was released. It's probably older by the time it gets to you through the news. So that is old news. We need to turn to leading indicators. So leading indicators are things that will essentially point to the future. So one prime example is new home construction, where they talk about new home starts. So that's where permits are pulled and homes are going to be built. So this is a leading indicator, and it's a leading indicator for a few reasons. One is it shows builder confidence. The builders are willing to spend the money, buy the land, and start the process going on building a home. So that shows builders are confident. Number two is it shows future inventory that's coming. So that's another reason it is a leading indicator. Another leading indicator would be pending sales. So you hear me talk about pending sales in my market updates, those will turn into closed sales. So So we want to look at pending sales, new listings. That's another leading indicator. Those are things that are pointing to sales. The other one would be mortgage applications. So as people are applying to buy, they need to fill out an application. So we want to watch that data. And it was just reported by the Mortgage Bankers Association that applications for new mortgages are down, as well as refis. But for the health of the housing market, we want to look at new applications. Those are back to February 2020 levels. So that is a leading indicator showing that there's a shift in the market. So we're going to go into another leading indicator that's extremely in the future and a very important one. So if you're ready to take a look at online home search, hit that like button and let's get started. So I'm going to show you how I accidentally discovered the shift in the market. And this is a tool I use when creating videos. It's called Keywords Everywhere. And I use it to find keywords so that I can put them in my video description. I can talk about them, find things that people are searching for. That's the goal. And I was researching some keywords on my usual every 2-week market update. So I plugged them in, wanted to see how things were doing, see if maybe there's some new keywords I should find. And lo and behold, here you can see. So you can see the terms are over there. You can see search volume, so that's relevant. You want to find terms that a lot of people are searching for. Cost per click, which I'm sitting in front of, isn't relevant to this discussion. Neither is competition. Then we have the trend and the trending percentage. And you can see the negative percentages. So that means the numbers are going down. And the way they calculate that is they take 12 months of data and compare the most recent month. They average the 12 months and compare how many searches were going on the most recent month. So if it's negative, that means the searches are going down. So you can see for these terms that I was using, Los Angeles real estate, Orange County real estate, Los Angeles real estate market, things are going down. And you can see over here, when we hover over the trend, you can see the data. So June 2020 through May 2021. Last June, we had 9,900 searches for LA real estate, Los Angeles real estate. May, we have about half, just under a little bit more than half. So that's a dramatic decrease. This is the time of year where we're supposed to see searches going up. Traditionally, things continue to ramp through spring, through summer, kids get out of school. Yes, some kids are still getting out of school. My kids here in Orange County, all 4 of them, went back to school towards the end and are getting out. So that shouldn't affect it. So we're seeing that there is a trend of downward search momentum. That's not what we expect. In fact, we expect it to go like this. We don't expect it to go down this much at all. So we got to thinking, well, you know what? Maybe it's just those particular keywords. This doesn't necessarily reflect buyers or sellers because searching for Los Angeles real estate market is a general search term. So let's get a little more specific. So I tried other terms like, how about one like, and let's sort by search volume here. Let's flip it around. So Los Angeles homes for sale, 14,800 is the typical average search volume. And we look over here in the trend, it is very flat. It is not a big increase, and it's only a tiny 6% increase. We'd expect it to be higher, especially in a crazy high demand market like we have right now. And then let's look at other terms. Orange County homes for sale. This is actually down. We can see that it peaked in February, March, April, and then it went back down in May. That is not supposed to happen. And the trend continues. So this is how buyers would search for homes. So the trend is continuing in these terms. People are searching for real estate less frequently in a month where they should be searching more frequently. So I wanted to get more granular on it, so I decided, okay, let me do the way somebody would really search in an area. So search for homes for sale in a given city. So I searched a few cities near me. Homes for sale in Costa Mesa, that's down. And that peaked in February and April, and that's down. We've got homes for sale in Huntington Beach. That's very flat. That should be going this way. Homes for sale in Newport Beach, that went up, but it's still very flat. We're not seeing dramatic increases that we'd expect. I added in some other spots. A bunch of Californians are supposedly moving to Texas, and Austin, Texas in particular. That's down. So homes for sale in Austin, Texas peaked in February and January. Whoever it was searching for, whether it was local Texans, out of area Texans, Californians, that's way down. So we see an 8% decrease in searches. Homes for sale in Idaho. I hear Californians are moving there. Doesn't look like they're searching all that much. It's flat. New York City, I mean, it got hit hard by the pandemic, but it seems to be rallying back. That's way down, 19% down. That peaked in February as well. We see this trend where it peaked earlier in the year, and that's when we heard the stories of 25 plus offers, not enough inventory. We still have those stories, but we have fewer numbers of offers now. And this is why buyers are sitting out. Homes for sale in Texas, that's up a little bit, but still peaked in February. So I thought, let's dive into the psyche. What are things that a buyer would search for? And this is based on other videos I've done specifically for buyers. In particular, I did a couple videos, Don't Buy Now, warning people how tough it was. So these are, by search volume, we can see the things that people are searching for. And this topic is very near and dear to buyers' hearts right now, and that's inflation. You can see the amazing number of searches that there are for the word inflation, and you can also see that what's happened from June of 2020, where there was 135,000 searches back then, May 2021, 246,000. So inflation is very much on the minds of many folks these days. So if you search for buying a house, it's down 12%. It should be up this time of year. It peaked again earlier in the year. Let's search by what's trending. So this is a cool tool here. So this shows you things that are down. Let's flip it around. We can show you things that are up. So housing market predictions 2022. People want to know what the heck is going to go on with the housing market. Buying a home in 2021, that's up. But it's not up because people want to buy. It's they want to know if they should buy. And the reason I say that is there's only 480 of those searches, but we've got 3,600 searches for housing bubble 2021, and that is up significantly from 0 in June. I mean, it is for 21 data, up to over 14,800. That's a big increase. So you can see another big one that increased, next housing crash prediction. You can see what buyers are looking for on Google. They're trying to figure out whether now's the time to buy because values are so high. And they're also trying to figure out if it's going to crash so they can jump in because values are so high, they feel like they've been priced out. So that's what we're seeing. Instead of seeing a dramatic increase in searches locally or regionally or a national level, for buying, we're seeing numbers going the other way. And this is why I feel buyers are searching less frequently for real estate. This will ultimately lead to fewer buyers writing offers, less competition, and this could mean that we see less demand, which could ultimately start to lead to price reductions in the real estate market. So where are the buyers going? Why are buyers giving up in the housing market 2021? There's a lot of reasons, and if you're a buyer out there, you know, but one is just buyer fatigue. You visited 50 homes, you've been outbid on 10 or 20 homes, and you just want to give up. You are tired. You are tired of the home search process. There's also just a psychological barrier. You see what these values are now. You see what homes are trading for. You're not gonna pay that much money for a home that needs a completely new interior and is sitting right next to train tracks. Psychologically, you are just not going to do it. Another one, of course, is housing affordability. As values have gone up 20 to 30% for median home values in my area in the past year, that makes it tougher to be able to afford a home. So housing affordability is certainly putting some buyers on the sideline. And of course, like all of us, we're wondering what is going to happen with this economy. Is inflation going to rear its head and that mean interest rates go through the roof? There's a lot of unknowns. And of course, it would be good to buy if inflation is going to go through the roof because real estate is a hedge against inflation, but none of us know what's going to happen. So that is also causing folks to sit on the sideline, and that's why we can see a dramatic increase in search for terms like inflation. So those are some of the reasons that buyers are sitting out. Some are done and probably won't buy for a long time. Others are sitting on the side waiting, just hoping values drop, and are ready to pounce when they do. So please leave a comment below. Let me know what you're waiting for if you're a buyer, what you're waiting for if you're a seller. If you're looking for more content like this and you want to know trends and you want to be on the cutting edge as a buyer or seller, make sure you subscribe to our free weekly email newsletter. We have a link below so you can do that. Thanks for tuning in. This has been Christian Walsh with Wire Associates, and we appreciate you.